The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990, and every day at this time, OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. They don't tell us points paid, points received, or the APR. They just tell us the number you put in your mortgage calculator. And if you don't have one, get our mobile app. It's free. ronismylender.com. ronismylender.com. Let's see what rates did. They locked at yesterday. 30-year conventional fixed rate loan down 6.19%. Jumbo 30-year fixed up 6.756. FHA 30-year fixed up 5.991. VA 30-year fixed down 5.638. USDA 30-year fixed down 6.048. If you want our market commentary, we put it out each and every morning, business morning, as early as the data allows. rsrlinks.com/market minute. rsrlinks.com/market minute. Let's see what the markets are doing today, because that was yesterday's information as far as the locks. But the markets are very, very fluid. They're always moving. So let's see where they're at today. The S&P 500 now down 27.38. The yield on the 10-year Treasury is down 5 basis points. The mortgage bond, the bond itself, is up 10 basis points, which means interest rates going down ever so slightly. The question you come here for is, why is this happening? Yeah, we could find out all those data numbers. They all come out on that super secret website, google.com. But here's the issue of why it's happening. Stocks, again, mixed. Mortgage bonds, slightly higher to start the day. The 10-year has made a nice move lower of late. Currently at 3.7, big improvement from the peak of 5% back in October 2023. Let's see, David Rosenberg came up with some interesting historical look at the 10-year rate and the rate cut cycles. On average, the decline in the 10-year Treasury note from the cycle peak to the first Fed rate cut is minus 1.25%, which is almost exactly in line with what we've seen this cycle. The high was 5%, and we are currently 1.3% lower at 3.7%. With the rate cut not till next week, we could see yields reach 1.6 and be exactly in line with historical averages, but close enough. But maybe not be exactly, but close enough. Historically, the records show that the yield goes down an average of 1.5% from the time of the first cut to the lows. If this time followed history, it would take the 10-year yield to 2.2%. Might be a little optimistic, but even if it went down to, the yield would go down to 2.2. Think about this portion of it, though. Historically, the spread between a 10-year Treasury and a mortgage-backed security is 1.79. Let's call that 1.8. So if the 10-year does go down to 2.2, that's a 4% mortgage. Okay, that would be a good news. I don't know that we're going to go that low, but we're already starting to watch that for you. And if you want to get in on the game, on the action, we are putting together something that is very, very unique in the world of mortgages and anything along there. So here's what we're doing right now for all of our private clients. And if you want to be a private client, you can get the same thing. We're putting together your full Household Board of Directors dashboard. What does that mean? Well, we look at where your mortgage rate is now and what it would make sense for you to make any changes. Now, how do you know where it's going to make sense for you to make a change? Well, we do a consultation to find that out, but you can go to rsrlinks.com/what's your number. rsrlinks.com/what's your number. And just give us an idea of what your number is. How much do you want to save before you want to start adjusting or dealing with your current loan situation. Now, what do I mean by that? Don't forget the 6 Ds, right? So you've got diplomas, diamonds, diapers, divorce, death, and default. So all of those things go into what's your number. rsrlinks.com/what's your number. So you find out all that. We put together a dashboard for you. It is customized. And we put on there your household board of directors. Who's your realtor? Who's your liability advisor? Yeah, that's us. Who's your insurance, life insurance, health, property and casualty insurance, CPA or enrolled agent? Who are all these people that are really financial advisor? Who are all these folks that are important to you in getting your household finances in order? Now, remember, we always look at from the liability side of how to determine wealth, but there is the asset side that you need to be looking at as well. So we're watching all of those things for you. Also, some more information on the Mortgage Minute. Yield curve uninverts. The longest yield curve inversion in history has ended. With the 10-year Treasury yield now higher than the 2-year Treasury yield, the yield curve remains highly inverted. If we look at the shortest end of the curve, with the 3-month Treasury yield still exceeding the 10-year Treasury yield by over 1.4%. Historically, the end of a recession has happened near the start of the end of the recession is near the start of these. March 2007, recession began 10 months later. December 2000, recession began 4 months later. June 1989, recession began 13 months later. October 1981, recession began 2 months later. May 1980, recession began 3 months earlier. If we see history repeat itself or come close, and we're in fact heading for or already in a recession, that does bode well for inflation and rates, as they always move lower during economic slowdown or recession. That's history. We can't promise the future, but that is the historic norm. CoreLogic Home Price Insights reported that home prices were flat in July after rising 0.3% in June, 0.6% in May, 1.1% in April, 1.2% in March. Appreciation gains have clearly slowed, but they have been strong. CoreLogic forecasted that it would rise by 0.3%, so this was beneath their estimate. CoreLogic forecasted in August home prices will rise 0.2% and anticipate that home prices will rise 2.2% over the next year, which is likely a conservative number. The NFIB Small Business Optimism Index fell from 93.7 to 91.2, which is a 3-month low. Plans to higher fell 2 points to a 4-month low at 13%. Those that expect a better economy weakened by 6 points, and those that expect higher sales weakened by 9 points, the lowest since May 2023. Higher selling prices, which is a gauge on inflation, were down by 2 points to the least since January 2021. The NFIB's read on the economy sounded dismal. Quote, the mood on Main Street worsened in August despite last month's gains. Historically high inflation rate remains the top issue for owners as sales expectations plummet and cost pressures increase. Uncertainty among small business owners continues to rise as expectations for future business conditions worsen, unquote. Pretty bleak story there coming from the NFIB. That is, but remember, where there, as Warren Buffett would put it, you want to be buying when there's blood in the streets. What do I mean by that? Well, get ready, because if the economy starts dropping, historically, interest rates will drop as well. And that could be good for you and your family, because we know that you have a lot more debt than you did before. Why? Because we just look at the stats. America's got a lot of credit card debt, 22.84% average interest rate on credit cards. So make sure you're taking a look at the two-step, rsrlinks.com/two-step. rsrlinks.com/two-step. That's the Mortgage Minute. Brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.